We're analyzing AvalonBay Communities, stock ticker AVB, to see if its market price is a fair value. We're using the Select 6 analysis to look at the most telling financial metrics before estimating an intrinsic value for AvalonBay. Then we're giving a final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing AvalonBay for your portfolio. Before we get into these valuable metrics, let's understand AvalonBay's stock performance. Right now, AvalonBay trades for $180.36 per share. In the last year, their stock price is down 17%. In the last 5 years, AvalonBay's stock price is up only 8% overall. They're compounding at 1.5% annually. In the last 10 years, they're compounding at 3% annually. Going back prior to the global financial crisis, in the last 18 years, AvalonBay is compounding their stock price at about 5% annually. AvalonBay is a real estate investment trust, or a REIT. They have to pay out at least 90% of their earnings as dividends to shareholders. Right now, AvalonBay pays a large 3.57% dividend yield. This is double the dividend yield you'd receive from an S&P 500 ETF. Their average dividend yield throughout this 18-year time frame is in addition to their compounded annual returns. AvalonBay trades in the middle of their 52-week high and low. 1% of the company's shares are sold short. AvalonBay is a large business. They have a $25.5 billion market cap. But why should we be paying close attention to AvalonBay? AvalonBay Communities owns a portfolio of 291 apartment communities with over 86,000 units and is developing 18 additional properties with over 5,000 units. The company focuses on owning large, high-quality properties in major metropolitan areas of New England, New York, New Jersey, Washington, D.C., California, and the Pacific Northwest. The company recently expanded into Northern and Southern California and is expanding into Southeast Florida and Denver, Colorado. Starting with metric number 1, we want AvalonBay's average return on equity in the last 5 years to be above 12%. A typical REIT earns about a 6% average return on equity. Looking for a benchmark that's double this builds in margin of safety based off the quality of the business. AvalonBay has increased their returns on equity throughout this time. Their returns have steadily increased since 2019. Averaged out in the last 5 years, AvalonBay earns an 8.7% average return on equity in a given year. While this is a few percentage points above a typical REIT, this is down from the benchmark we were looking for, meaning this is an X on metric number 1 for AvalonBay. Metric number 2, we're looking at their high-level growth. We want to see 5-year growth in their revenues and their cash from operations. Both of these have to be up for this to be a check. In the last 5 years, AvalonBay has grown their revenues by 17%, and during this time, their cash from operations have increased by about 9%. This is slight growth for both of these, but both of these are up, and this is a check on metric number 2. Metric number 3, we're looking for decreasing shares outstanding. AvalonBay has kept their shares outstanding pretty much the same in the last 5 years. They've slightly diluted existing shareholders, issuing about 1% additional shares. Because they've increased the number of shares that they have outstanding, this is an X on metric number 3, although their shareholder dilution is much less than we've seen in some other REITs. In metric number 4, we're putting our previous metrics together. Here we're looking for cash flow per share growth in the last 5 years for AvalonBay. We learned the company has slightly grown their cash from operations, and with just marginal shareholder dilution, their growth in their cash from operations outpaces their shareholder dilution. This is a check here on metric number 4, as AvalonBay has grown their cash flows per share. Recapping where we stand currently, through our first 4 metrics, we have 2 checks and 2 X's for AvalonBay. Metric number 5, we're evaluating how the business uses debt. During economic downturns, it's overly levered businesses that are likely at the greatest risk of poor outcomes. We want AvalonBay's net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of cash from operations the company has produced in their last 5 years. During this time, they've increased their net debt position. Right now, AvalonBay has just under $7.9 billion worth of net debt. During this time, the company has produced about $6.5 billion worth of cash from operations, meaning this is coming under what their net debt position is at. This is an X on metric number 5. To figure out if this may be a potential concern for the business, you'd want to dig into the company's debt profile. They'll break out how this debt is structured, when it matures, what rates it's at, and if there are covenants associated with the debt. That'll help you determine if this could cause troubles or not. Before we get to metric number 6, it's time for our bonus. As our bonus, we're looking at Avalon Bay's dividend profile. Right now, Avalon Bay pays a large 3.57% dividend yield. While this yield is twice as high as the dividend yield from an S&P 500 ETF, people make mistakes all the time by blindly chasing dividends. It's important to stop and look at the underlying fundamentals of a business to see if their dividends are supported. We want Avalon Bay's dividends to be supported by their cash flows. That's been the case in all 5 of these years. The company has slightly grown their dividends throughout this time. They've kept their dividends flat since 2020, and as we've learned, Avalon Bay has increased their cash flows per share. The company's maintained a reasonable dividend payout ratio throughout, and they've been able to support these dividends. While this is a snapshot of their last 5 years of performance, and it's no guarantee for the future, it looks like Avalon Bay's cash flows have supported their dividends. The big metric of them all, metric number 6, we want their average cash from operations to their total enterprise value to give us a yield that's above 5%. If this is the case, this may provide a slight risk premium to the yield of the 10-year treasury. It may offer a reasonable starting point for a valuation of Avalon Bay. During this time, Avalon Bay has produced $6.5 billion worth of cash from operations, meaning they produce about $1.3 billion in cash from operations in a given year. Right now, Avalon Bay has a $33.5 billion total enterprise value. This takes into account both their market cap and their net debt position, giving a perspective of Avalon Bay similar to it being a private company. When we divide their $1.3 billion of their average cash from operations by their $33.5 billion total enterprise value, that gives us about a 3.9% average cash from operations to enterprise value yield. The company has produced $1.4 billion in cash from operations in their most recent fiscal year. When we divide that by their enterprise value, that gives us about a 4.2% current free cash flow to enterprise value yield. Both of these yields are coming in slightly above the yield of the 10-year treasury, yet they're down from that risk premium we'd be seeking. This is an X on metric number 6. Just because this is the case doesn't mean you're throwing this business out. This is not a buy or sell recommendation of any security. It's not financial advice. Stick around as we come to a more concrete estimate for Avalon Bay's intrinsic value before giving our final rating to the business. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Avalon Bay Communities, which takes us on to using a discounted cash flow model to come to an estimate of Avalon Bay's fair intrinsic value. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. We're starting with an average of Avalon Bay's cash flows in their last 5 years, then using historical growth assumptions to project these into the future. It's up to you to do your own homework to figure out if these are accurate or not. Assuming they grow their cash flows at a rate of 4% annually for the next 10 years, then assuming these cash flows grow at 2% annually for the 10 years from there. If we add in the company's tangible book value, which gives us an estimate of their net worth, if we were seeking a 15% rate of return, which is the rate of return Warren Buffett's looking for from his investments, in addition to his margin of safety requirements, from today's valuations, an estimate of Avalon Bay's fair intrinsic value is around $141 per share. There are key factors to keep in mind. Avalon Bay has been a moderately predictable business in its past. Owning these apartment buildings would tend to be more predictable than some other types of businesses. That's not a guarantee, however. The company's dividend yield would already be included in this 15% discount rate. We would not be doubly counting the company's dividends. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Before considering any potential investment decision, consult with your financial advisor. In just a minute, we'll give our rating to Avalon Bay, but we have to address something first. What are the qualitative aspects of the business? Starting with the key points supporting a potential long thesis for Avalon Bay. Number 1, while current supply deliveries are near peak levels, rising construction costs and tighter lending standards could lead to lower supply growth. Number 2, Avalon Bay's portfolio of high-quality assets should see relatively consistent levels of demand long-term from high-income earners and will likely see just a small hit to fundamentals as most residents have not experienced job losses. Number 3, Avalon Bay has a history of finding accretive development opportunities to bolster its growth prospects. Then the key points supporting a potential short thesis. Number 1, with several alternatives to multifamily housing and short lease terms, demand for apartments can be more variable than many other commercial property types. Number 2, the company's current development pipeline is nearly depleted, and while it is ramping it back up, it will take some time for those projects to produce results. Number 3, many millennials have considered alternatives to urban apartments, including suburban apartments and single-family home ownership. This demographic has put off many major adult milestones, but may finally be making the shift toward the suburbs. There you have it for a balanced perspective of some of the qualitative factors for Avalon Bay. Now it's time to give our rating. In analyzing Avalon Bay Communities, stock ticker AVB, we learned the company produces above average returns on equity. Although they were below the benchmark we look for, the company has slightly grown their revenues and their cash from operations in the last 5 years, while marginally diluting existing shareholders. While it doesn't look like the company's cash from operations fully support their net debt position, this may or may not be a concern when we consider the assets that Avalon Bay has, and you learn how their debt is structured. Both a current and an average yield of their cash from operations to their enterprise value was coming in above the yield of the 10-year treasury, but it was below the risk premium we'd ideally be seeking. Avalon Bay supported its dividends in all 5 of the last years. They grew their dividends for the first 3 years and have kept their dividends flat since 2020, while maintaining a modest dividend payout ratio. It's worth reiterating this analysis is not financial advice. Combining the factors of our analysis, Avalon Bay looks like a moderate candidate for further research. When we performed our discounted cash flow analysis, if you've done the work and you believe those historical growth assumptions, from today's valuations, if you were seeking a 15% rate of return, an estimate of Avalon Bay's fair intrinsic value is around $141 per share. The company was last at those levels in October of 2020. You'd want to be patient as you research the business. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, comment down below what business you want me to look at next time. Thanks for learning about Avalon Bay with me, and have a great day.